we have or an income statement which shows that for total revenues, okay, right here, that shows that our total revenues are from year to year are going up, and then our cost of goods sold, selling, general and administrative expenses, and operating income went down. So that's helped us to get a net income greater than...
Go back to the first slide. So you have your gain and loss there, and your sales.
And then that helped us to have a net income of 23.4 million at the end of the 2000. I mean, right now in this year.
Now we have the balance sheet, which is, as you can see, if you can see the graph, I mean the numbers. We have a strong balance sheet that has consistently grown from 7.9 billion to 11.1 billion in its cash reserves over the last 4 years. Is all over there at the top. And then our inventories seem to be well managed, because compared to last year, inventories we have grown 16.59%.
Therefore, we could cover our liabilities perfectly and still have money for new expenses
At the end of all
this year.
Go back on that slide.
Oh, later on we're going to explain the ratios and other measures.
Okay. Go ahead.
Okay, the statement of cash flow. By looking at the statement of cash flow, analysts can easily see the sources and use of cash throughout the year. In 2008, Nintendo have an increase in cash by 60.23%, or up to 4.1 billion, which is the biggest increase by any company in this industry. In the statement of cash flow, you can see cash flow from operations, which is a day-to-day business reflection, which is what we get in cash from our operations. In 2008, we got 3.3 billion from a cash flow margin of 0.20%. Cash flow from investments, you can also get it on the statement of cash flow. It's the cash to maintain the growth, which equals 2.3 billion.
Can you tell me why that was an increase there? Can you tell?
Because it means that you sold more of your assets that you had than purchased.
Exactly, because it says their sale of property, plant, and equipment 51.3. You all can take a look at that.
Yes,
that's where that increase in operating comes from.
That's where we were going to that. It
Okay,
means that you sold more than you purchased.
Right.
You can also get cash flow from financing, and that reflects your inflows and outflows between the owners or creditors.
Okay, the ratios and other measurements. Working capital, we have $10,796.1 million, which is a calculation by subtracting.
Yes, the current assets and current liabilities. This amount tell us how the company could cover its liabilities with its assets and still have money to cover new debts and expenses.
Now we have current ratio, which is 2.9.
Yes, which is the division between current assets over current liabilities, and this 2.9 million means that there is 2.9 million assets for each $1 of current liabilities. So for every dollar of current liabilities, there is a 2.9 million in current assets.
That's really good.
Very good.
Okay, then we have the gross profit, which is total revenue over cost of goods sold, and it gives us 7.6 million. This being the amount available for the company to cover its other operating expenses. Also, we have profit margin, which is net income over net sales, giving us 15%. And that means that for each dollar on sale, this business is generating a little more than 50 cents net profit.
Okay, we have operating income, which gives us 4,874 million, and
Okay, this shows that our revenues exceed our expenses from normal business operations. And normal business operation exclude expenses such as taxes or interest.
The net income as a percentage of net sales is 15.4. The formula is net income divided by average total assets equals 15.4%.
And what is it measuring?
No. Okay, net income was measures.
it measures how much of your net sales it comes out to net income.
From net income, okay. Very easy.
And then we have the return on assets, which is net income over average total assets, and that gives us 14%. That means that for each dollar invested, Nintendo generates 14 cents of net income.
Which is return on assets.
Return on assets.
Return on assets.
Which means what? Return on assets, what are you doing?
Return on assets.
Your assets are generating something for your company.
Yes, thank you.
And return on equity is 21%. Net income divided by 2 holders' equity. Nintendo has earned 21 cents for every dollar invested by 2 holders.
That's it.
This is our end of our presentation. We hope you liked it. And
Any questions from the audience?
Any questions?
Questions? No, very good.